Two breaking news. The first is Ant Financial has finally cleared regulations. So to Alibaba shareholders, that's a sigh of relief. The second is Jack Ma. He has resurfaced. You know, I'm a fan of Jack Ma. I've even visited Hangzhou before. So to see him resurfacing is great news. We can interpret this with a spectrum. On one end, is that he's gotten forgiveness, from the Communist Party. On the other end, he has surrendered. He has coerced into all the requirements needed. But nonetheless, within this scale, it's much better than the company being destroyed. And today I'll be sharing with you why I'll buy Alibaba. I'll give you a few key parts. The first, I'll give you a breakdown about Ant Financial, the whole saga about it. The second, I'll run through Alibaba's business. And last but not least, I'll share with you what exactly I'm interested most in Alibaba itself. With that, let's roll in the intro video. Hi guys, welcome back. Now, Ant Financial is very crucial to Alibaba's profitability also. Ant Financial, it wanted to do an IPO, but that IPO was scuppered as of November 2020. You may have seen news about it already, so I won't dwell further onto it. But let me share with you, in terms of valuation, it was projected to be about US 300 billion, Ant Financial, and Alibaba owns 1/3 of it, which means about 100 billion in terms of valuation. Now, what does Ant Financial do? They have, payments, of course, which is Alipay. They have fintech business, credit, fund management. I've even a previous video which I'd like to introduce to you also. This touches on Ant Financial in totality. So look for links below. And let's dive on as to what happened in November 2020 when Ant Financial's IPO was scuppered. As you can see in this chart over here, leading up to the IPO, there was a lot of hype, a lot of anticipation on the potential valuation of Ant Financial. But come November 2020, the deal was scuppered. I was actually personally trying to bid for the IPO itself. And then when that deal was scuppered, the news came out, Alibaba actually lost 8% on that day, 3rd of November 2020. And as you can see in this chart, 310 to 285 in terms of price. So now that it's resolved, let's dive on to what exactly is investors going to benefit from this resolution. A few key parts. Let me pull up this article and read through with you. The first part is Ant Financial's credit, investment and insurance platforms will be placed in a holding company, and this holding company is going to be overseen by Beijing's watchdogs. And with that, of course, there's going to be more robust regulations, higher compliance costs, and of course, it will certainly curb on the growth as well as the margins itself. In Singapore's finance, there's so much regulations. I mean, the financial industry, I can share with you, compliance costs is certainly not a small thing to ignore. And then let's move on. Housing its financial operations in a holding company will also mean that it will be subject to similar rules to commercial banks, such as how Ant Group sources and uses funds, maintaining a capital buffer, and placing risk management systems. Now, previously, Ant Financial was just doing referral business. It was referring loans to banks, and to fund managers, it was referring business for all the cash that consumers actually place on platform. So it was purely doing referral business with no risk that it retained. That created asymmetry in terms of risk reward, because when they farm out the business itself, they don't take the risk. They are very interested to ramp up volumes. That's actually how banking regulators are probably perceiving that risk. So placing it similar to banks is not a good idea for Ant Financial, but also necessary. If you look in terms of Hong Kong's banks, the index itself, you realize that banks have been losing in terms of market cap, simply because business is not so easy to grow as compared to a fintech firm. So now let's move on. In this article, it's also mentioned that signs of a growing understanding between Ant's group's people and regulators have emerged over last month. Yi Gang, the governor of China's central bank, has also hinted that Ant Financial could be allowed to pursue an IPO once it fully complies with the country's laws and addresses customer complaints. Now, the IPO possibility is great news. If it actually does take place in 2021, it's certainly going to be a catalyst for Alibaba's share price. Would it be 300 million valuation? I'm not too sure about it. But it's also not the main reason what is getting me the most excited about Alibaba, so stay on for it. Now, in this segment, let me help you understand what does Alibaba's business mean. Alibaba owns about 55% of all e-commerce market share in China itself. Some sources quote it up to 58%. And who are the next few competitors? They are actually JD.com, which owns about 18% of market share, and Pinduoduo, who owns about 12% of market share. Now, at the peak of e-commerce growth, Alibaba in 5-6 years ago owned about 80%. So this market share has been eroding. But of course, the pie has been growing bigger and bigger also. So Alibaba does still have quite a big monopoly of things. That's why this whole antitrust regulation is coming about. So to share with you, Amazon owns about 40% market share of US e-commerce. So Alibaba, even at 50+%, is still a dominant force in China's market. Now, if you're curious about what Alibaba's businesses are, let me pull out a few things for you to see. They have Taobao, which I'm sure you have heard of before. They have Tmall. And if you don't really know what's the difference between Taobao and Tmall, Taobao is more B2C or C2C, small merchants or between consumers itself. Tmall is for brands, which is mainly B2C. So there's a difference in terms of market segmentation also. Then Alibaba also has AliExpress, where all the drop shipping ideas are coming from. I've made a previous video on drop shipping business. If you're keen to find out, look for a tutorial also. I'll leave links below. AliExpress is where a lot of drop shippers take ideas and market in US and Canada to get customers to purchase those products. Now they also have Lazada, which is in Southeast Asia. And from talking to my wife, she uses all these e-commerce a lot in Singapore, and she claims that Shopee is actually much better. I don't know about it. If you have a few of things, leave in the comment sections. I do also think that Shopee seems to be a lot more vibrant in terms of their marketing efforts. I see a lot more of their ads. So I don't know how much Lazada is going to be competitive in the coming years ahead. Now, e-commerce is important to Alibaba. If you look at the numbers itself, it forms 85% of all income. Now that means that e-commerce, if it continues to grow, Alibaba's fate, it will be good. And if we can see the numbers from the latest third quarter 2020, it's actually grown by 38% in terms of revenue growth. That is fantastic news. Third quarter is usually a strong quarter simply because of Singles Day, which Alibaba has invented. There is a lot of purchase. They have set a new record again for Singles Day. And third quarter growth is good also in this context simply because COVID-19 has challenged certain beliefs of how commerce is being done, and good numbers certainly proves that this model is still working. So could it be e-commerce as to why you should invest into Alibaba? Now, e-commerce has been growing. I've shown the numbers already, but I'm not too sure if this growth is still accelerating. After all, Chinese market is maturing already. 5 years ago, it's probably at an accelerating pace, but right now, 2021, I do believe that Chinese e-commerce market is even more competitive than before, and it's a lot more saturated already. It's not a new business, e-commerce, but there's actually a new business coming up with Alibaba. I don't know if you've seen the news or not. Alibaba has partnered with SIAC, which is China's biggest automaker, and in this collaboration, they are going after the EV space. Now, China is the fastest growing EV player, and because of so much subsidies, there is a lot of rapid R&D and adoption of things. And Alibaba has partnered with SIAC to form Intelligence in Motion, IM. So the main thing is, could this venture actually be the main crown jewel of Alibaba in the coming years? I'm actually a bit skeptical about it myself. Because you have seen before players like NIO, like BYD, and actually there's reported more than 600 EV manufacturers in China itself. It's going to be a bloodbath. It's not easy. Although Alibaba and SIAC have deep pockets, it's going to be a hyper-competitive market. And I'm not too sure if Alibaba can actually grow significant market share from the EV space itself. So in the next section, I'll be revealing to you what is the most exciting, in my opinion, of Alibaba. Now, if you have benefited, smash our like button so that more people can see valuable content like this. And again, inviting you to press or subscribe, because I'll be launching more ideas on how to invest into China in the coming year ahead. Now, if you're wondering what is the answer that I've been hiding all the way until here, I've actually shown glimpses of it already. I don't know if you've seen this image thoroughly or not. Do you see there, the number 2 player, cloud computing? Cloud computing is here to stay. It's where Amazon Web Services, AWS, has brought so much money to Amazon itself. If you look at this 5-year chart, you realize in the light blue that Alicloud has grown significantly over the years itself. And in third quarter 2020, Alicloud has grown in revenues an additional 50% again. That is fantastic results. I do believe that cloud services is just going to be used with all big corporations, even in China. What I understand in Singapore's situation is big companies and government agencies, they seem to be a bit reluctant to use Chinese cloud simply because of privacy. That's my third party insights to things. So actually, in Singapore's context, we do prefer American players, AWS, Microsoft, Google. But I don't know in Malaysia, I don't know in Southeast Asia, I don't know in China. I'm sure Chinese players are okay with Alibaba. In any case, Alibaba's Alicloud is the number 4 player in the cloud space itself and the biggest in China. So if Chinese MNCs continue to adopt cloud, I'm sure this will continue to grow. If they win in China, it's more than sufficient already. That's my quick take on things. Now again, if you have questions, leave it in the comment sections. I'll be keen to hear from you. And with that, let me introduce you to a previous video, which I've mentioned already. Ant Financial, I've done this full breakdown, and I think it's important if you want to invest in Alibaba, follow Ant Financial's tutorial, because Ant Financial's growth could also be big, moving in the years ahead. And Alibaba's 1/3 stake is still going to be very lucrative. So with that, inviting you there, I'll see you in a future video. Take care and goodbye.